Welcome back to the Daily Hunt. I'm Henry, and like every other day, we're going to be covering the financial markets. We're going to be covering stocks, commodities, and crypto. Yesterday, I mentioned a few things, and in yesterday's analysis, I mentioned that we are looking like we might bounce on the S&P 500 and try and create new highs. And I also mentioned for crypto that we had a resistance zone around 111 on Bitcoin, 112, and around that level we found a bit of resistance. So I want to cover those two topics, and I want to cover those two markets mainly, and then we're going to be talking about gold and where I see gold going. I did mention yesterday that for me the short position is a better play than the long, but has that changed? So let's go right into the analysis. The first thing I want to cover is the S&P 500, the NASDAQ, VIX, and the Russell 2000. So we'll be covering some of the key indexes for the stock market, and then we'll cover the VIX, which I think is a key, as well as the Dixie, which I think is very, very important today, actually, because I had a trigger around early morning hours here in London, and I think it's triggered a bit of a sell-off in crypto and potentially in gold. Okay, so we have the S&P 500 here. I discussed it yesterday in my episode of the Daily Hunt. We discussed that there was high probability of a bounce here because of the VIX. So if we go to the VIX, this level is historically a level that bounces, and we see that the VIX has continued to drop down. Yesterday we dropped a little bit and saw a little bit more upside momentum on the S&P 500, NASDAQ. And on the side here you can see 1.3, 1.9% on each of these main indexes, and we saw a drop of around 9% on the VIX yesterday, breaking the level that I mentioned during the video, which was that 19.8 level. I felt like if we break that, then maybe we have a little bit further downside on the VIX to around this level, and the market starts getting a little bit more confident and complacent, and potentially money flows back into the S&P 500 and so on. So that's the main reason why we've seen a bit of a move up higher. The markets are looking like they like this price here, even though personally I feel like a 5% pullback would be normal within this 6.4K level. At the moment, there's no signs of that downside, mainly because we've also gone under this level on the S&P, which usually is a bounce zone. As you can see here, rise and a bounce zone. So this level is a bounce zone, and then this level of 55. So 42, 40, 38 bounce zone, and then we have the 52 level. So that's the main reason why I think we're bouncing here. I think people are enjoying the cheaper prices here and think that the market should move up higher, and that will probably take us all the way up to 6.8, maybe to a new high if we continue moving up higher. I did also mention yesterday that for me with S&P 500, it was if we close above 6.7K, then I start feeling a lot more confident in the market, and this is exactly what's happening here. I ended up buying into a number of positions. You have some here, Intel, Tesla, I mentioned that was already positioned in. We ended up buying SANA, Therapeutics, and then we bought some of these other plays here as well on the bounce. So I am looking for a nice move here for maybe a few weeks, but again, October is very volatile, and I'm prepared for everything. I'm prepared for some volatility, which we've had this month so far, and we could have again. So with that in mind, there's nothing else that I can cover here on the weekly other than we've kind of like bounced off that 10 moving average there, as you can see. So that's another reason why we had the bounce, because we haven't had it for a while. We had one here in September and then again now in October. So key level for buyers. as well as on the daily, just under the 20, and then building some momentum on the RSIs. So the relative strength coming in because it looks cheaper to a lot of investors and traders. On the monthly, I am worried. I have mentioned that the monthly on Bitcoin looks fairly overbought. The S&P as well, fairly overbought. But the monthly can continue grinding up higher here if the markets look bullish. And I wouldn't be too concerned with this one. I think we would have to be looking at the daily and the weekly if we want to be making some swing trading decisions. And that's exactly what I've been doing, buying the bounces and scaling in and out of positions as and when the market shows weakness and strength. And it's exactly what I recommend that everybody does to protect profits and obviously increase probabilities of them winning. In terms of the other market, in terms of looking at the other index, and not the other market, looking at the NASDAQ, again, showing very good strength here. We do have earnings season as well. So we have Tesla reporting earnings. We have Intel, I think this week reporting earnings, and a number of other companies that I've invested in. So we are at the start of an earnings season, and we could see some good earnings coming in, maybe a final move starting right now to go into the new year. Again, with this one, it was around this 20K level that I thought if we break above that, we are going bullish. We actually opened above it just because the pre-market was pretty good. And I would like to see now a break above all-time highs. And this is the reason why I'll set an alert here. And for me, I'll now move the short side to around this level. Okay. So I want to monitor whether we get back in to the range or we break out of the range. And if we break out of the range, I see the NASDAQ 100 and the top companies moving up higher. Earnings are probably going to be good, and the rest of the market should follow. We've seen that as well with the Russell 2000 bouncing here as well, moving up higher, and potentially we can get new highs. I will be looking at some smaller cap Russell 2000 growth from these smaller caps to trade, because I do think, and I've mentioned this a number of times, that of course we would have traded and traded some of these ideas from the bottom here, but I think at this point we now have another 20-30% upside. So that'll be if we get a cycle into the smaller caps and growth, and the market to go into kind of like a mini euphoria, which I think would be kind of like a top in euphoria. That would probably happen with the VIX moving back under, I'd say, 17 and all the way down to 15, maybe even 14. We haven't seen the VIX under 12, and I would like to see it maybe from this position come back down and move under 14 to around 12, 11 for that true complacency and euphoric buy-in. That might happen later on in the year, might happen next year if the market conditions are correct. So far, all I'm doing is I'm positioning myself on the long side and looking to buy any dip opportunity and scale out if I'm seeing weakness on the trend. So that means that we can profit as much as we can from the trends moving up higher. And any times we get these kind of like breakouts I exit or I scale out positions and then rescale again or re-enter positions when we move back down, with the idea of kind of taking advantage of the dull market that we're in. As you can see here, we are in quite a dull market, and yes, it could be a top now, but on the up, I think everybody knows that the market overall will move upwards, especially if there's money printing happening in the next few months. and monetary policy changes as well, with interest rates being dropped and so on and so on. So we have some reasons for bullish momentum here, and that's the reason why I'm staying on the bullish side. I'm not saying that we are bearish in any shape or form. It's just that I'm being cautious on these consolidation periods, which can be volatile and lead to drops in certain trades. So one of the trades I'll show you guys as an example in terms of exiting at the right time and trading the opportunity. We took a trade in August with IQ, which is seen as the Netflix of Asia, and we took this trade. We gained around 40%, and then we started scaling out around this level when we started seeing. So we initially scaled around here, and then we scaled around here in the Discord group, and then we sold around 2.55. And I have all of these in the Discord group with proof. I'll show you guys later, considering that it's moving me to a different screen. But the idea here was exiting at the right time. Although the market's grinding up higher, exiting at the right time on your trades is essential, because maybe the market overall will move up higher, but your trade won't. And then you have a prime example of all this profit being taken back here and losing it if you held through. So it's essential that you scale out and scale in. At least that's what I found for myself, and that's what I apply in the Discord group and I share with my community. Okay, so I think that stock's covered. There's nothing else to cover here other than the dollar, and one of the main reasons why I've been very cautious with the market is the dollar. And I do feel like the dollar will move up higher, reclaim this 100 level, and then maybe even go to 101. Just the way it looks, the way the formation is, you have the double bottom, you have the higher highs developing here, the dips are kind of being bought up and or moving up, and we're seeing that the Dixie showing some sort of strength. And this is the reason why I felt that gold was a nice short, and I've taken this short position here. I'm lucky in the sense that what I did was I entered around 4.32. 5, I think, approximately. It's probably here on the 1 hourly. Yeah, around we actually entered around this level, and I was ready for to be liquidated, right? So I put my stop loss around this kind of 3.85, 3.9 level to protect myself. And then, as you can see here, double top on the 1 hourly, and then now we're moving down. Very, very high probability trade. I've mentioned it in the previous video that this will probably take us at least back down to 4.1, and then we have 4,000, and I think probably 3.9k with a consolidation happening around that level and reaccumulation by institutions like China and so on and so on. So generally speaking, it's I think it's a very, very good trade, huge opportunity here, and I hope that some of you have used my analysis and enjoyed the trade, because it is going to be a nice trade in my opinion. But I could also be wrong. So none of this is obviously financial advice. It's just me sharing what I think about the markets and what I'm trading myself. I lose money as well, and I win money as well. So always bear that in mind. With stocks, though, I've just reported my September performance for the US Investing Championship. Made around 56% up until September. We're around like 85% now in October, because we've had some nice moves with Rigetti, QBTS, some of these other big plays here that we've had previously. With stocks, I think there's maybe one more leg left. So we can probably make another 10 to 20% if we're picking the right stocks. And it's been a stock pickers market, and I've mentioned this before, and I think we should be very, very, very cautious buying the S&P 500 across the board or buying, pretty much everything. You have to be picking the right stuff. And as you can see here with Sana, with some of these other plays, they made around 6% yesterday when we bought them, and S&P only made 1%. So you have to be buying the right stuff, the right industries, the right sectors. And this is where the Discord group that I've created comes in, and I share my watch list every day there for stocks and cryptos, as well as some ideas that I have, top ideas of the day. Like yesterday, we shared, and I think Dave can break out here and give us a 1 to 4. Okay, so this is kind of like the ideas that we share in the Discord group. And to join that group, go and click on the link below, the WAP link below in the bio, in the description of the video, and join the community. It's a low fee. Try it out. If you enjoy it, if you like the group, if you like the community, if you like what I do, then obviously stay. If not, very, very low risk investment for you guys. Okay, so getting back into my analysis, I want to cover now Bitcoin and crypto. I mentioned yesterday with crypto that there is high probability of rejection, and that's exactly what we saw. Now, I thought maybe we go all the way up to 112, 113. We haven't done that. We've rejected around this level. So maybe we are actually consolidating here for build up. So I also mentioned the RSI levels, which are essential. This is where we usually get a rebuild and a buy the dip kind of zone for the market, especially on the 1 daily. And then on the 1 weekly, what I still see here is downside potential and very, very risky play if you're going long straight away right now without clearing the 113 level. As you can see here, we had that sell-off on the week of the 6th of October, which covered that period of the 10th of October that Trump spoke about tariffs against China due to rare earths, and that kind of dumped the market a little bit. And this doesn't look very bullish to me. I've mentioned it before. It does not look very bullish to me, and I'm being very, very cautious here. One thing that we can do is just stick a trend line, something like this, or maybe even here, right? It's up to, it's depending on how you guys see it. And you'll see that now we are breaking this zone. It looks a bit noisy here because there's a lot of drawings on the 1 daily that I use, but look, support here as well, pretty much around that level. We are now breaking this level with a consolidation. And what I also mentioned yesterday was that since the high of December, we haven't actually moved much in the market. The kind of average price during this period has been where we are right now. So we are around the average price and last year's high. So Bitcoin hasn't really outperformed anything. It's been stocks that have been outperforming, and the S&P 500 has done pretty well. We haven't seen a huge gain here with crypto, and it looks to me like we could get a deeper dip to 98, and then maybe we have 88 and some other levels like 76, 75 again for a rebuild. One thing to note is RSI around 44. I know a lot of you guys probably don't use RSI, but it is one of those things where I look at some of the details here, trying to look at the relative strength of the asset and some kind of like patterns that I see. Again, 80% of trading is done by algorithms and computers. So what are they using? Mathematical models, strength, buying, etc. Of course, you can be looking at order flows and all these other stuff that a lot of traders look at. As a swing trader, I don't really need it, and I'm doing pretty well for myself. So what I would say here is this level 44 is a rebuild zone, but to achieve 44 means that we have to go back down under 100, and if we go back under 100, we run the risk on the monthly of seeing a significant drop or maybe a bearish cycle happening with Bitcoin, and that would kill the whole momentum here with cryptos. And we're seeing the rejections already happening. Yesterday So we are really at this kind of 50-50 point. For me, I've mentioned it yesterday. I will stick to my analysis because nothing's really changed. Above 113, it will be going long. Okay. There is resistance at 1 Bitcoin. I mentioned this before. There is resistance at 118. We clear that. We are now going to new highs. If we don't clear 118, we come back down. I sell for break even. Okay, very, very clear strategy here. There is no complicated analysis. I'm telling you my zones. I'm telling you why I'm buying, and I'll be sticking to this because this is what I'll be doing. If we get a rejection around this zone and we clear 100 under, the shorting opportunity is fantastic. We can go all the way down to 88. So I might be taking that opportunity. If I don't take that, I will be buying around those zones. The 88 to 75 to 76 is when we get to those zones for the next swing up. So very, very simple. I've already outlined what I'm looking at, and the zones are very clear. 113, we buy. We have to take on the risk here if it breaks up with momentum. If it comes here, rejects, we go short. If we buy and it goes up higher and rejects on 118, we sell for around break even, small profit. If it breaks 118, we go to new highs, we go to 150, and we keep that trend moving up higher, and we make around 30-40%. Okay, super simple, nothing complicated. At the same time, we will be trading Ethereum, and this is where I want to go into Ethereum now and discuss that. Ethereum is getting a rejection. I still like the fact that it's holding the lower band of the channel. So we will have to see here if we find its support again around this 3.6 level, 3.7. And if we don't find support here, then we are going all the way down to 3.3. What I would like to see is some support around this level and move up higher. That would also create more, bring in more buyers, trap more buyers and sellers, and then there's a decision to be made around this level, around the midpoint here of support 1, which I've noted on my chart. So that will be the area that I'll be looking to either buy or short from. Okay, here I don't like the short. I like it around here. I think there'll be more traps happening in crypto in the next few days and weeks. So be prepared. Be prepared until I think November, end of this month, we decide where the market goes. I think with interest rates first of all, and then we will have November details about Trump's tariffs with China. He just sent out a tweet or post on Truth Social where he mentioned that if they don't make a deal by the 1st of November, there'll be 150% tariffs against China. So there is a deadline there that they're working towards. If we get interest rates lowered, China clearance, and there's no tariffs or some sort of agreement in place, or a delay from Trump. Trump has been delaying tariffs. If he delays it for 90 days or whatever it might be, the market goes bullish, and that'll be the trigger point. It's aligning perfectly for that November move and volatility in October, which I've been mentioning for weeks now. That's crypto. I don't want to dwell on any other opportunities. I mean, I traded Zcash on this bounce. Don't know if I mentioned it in the previous video. And we ended up selling around this level. And we're going to wait here and maybe buy again. Zcash looks very strong. I had this initial trade here earlier in September, right? And I just didn't hold through. So I kind of feel like I missed out a little bit, but is what it is. You know, the idea was there. We had the right idea, which missed a big opportunity. Is what it is. And we will continue to find new opportunities in crypto, as we have done here again with this trade recently. And some of the members in the Discord group have traded this as well and made some decent returns. Ethana, or ENA, we traded this on the move up. We are now looking to sell this on around break even. because it's rejecting around this zone, and we could see a feel of this shadow, right? A feel of this area. Typically, we kind of see a 50% or 75% fill. Sometimes even go to lower lows. So I'm very cautious about this event that happened on the 10th. It shows a weakness. It shows that the market is ready to sell, and they could be, obviously, some people will justify it as stop losses being hit, but I think the market is at any point ready to sell because they have a lot of leverage on. And this isn't just in crypto, this is also in stocks. We're seeing 0 day options, we're seeing all sorts of ETFs for 3x and so on and so on. So a drop of, let's say, 25% or 30% or even 10% can really, really shake the markets in stocks. And a drop like this can really shake the markets as well for crypto. And as you can see here, this went all the way down to 13 cents. Yeah, of course, it got bought up and we're around like 40. You know, you could have made 4x there. But, you know, who knows at these points to buy? Like, it's just, yeah, you can buy on the lower time frames. Super, super risky period right now. Very volatile. Something's going on. Okay, that's crypto. I mentioned the dollar already. We covered the dollar, and that was key for me. If you see my alerts here, the dollar triggered at 3:38 a.m., which for me was wake up and put some stop losses on some of your positions. And it was on ENA and Zcash. And we were good with gold because gold has suffered, and that's where I'm going to go to now. So we have gold in commodities. Gold performing really, really well, doing exactly as I said yesterday, that this is the trade. This is the trade that we can take with high probability. This is maximum risk here for the upside, maximum opportunity for the downside. Okay, so we are taking the short, and that's exactly what I've done. And I'm waiting for this move to go all the way to 4K to 3.9K. I think that's kind of like a given. It's just a matter of whether we find support on the way down and then get some fake outs. But I'm feeling confident here for this swing, and I like it. Silver was another opportunity that we've had, and silver's played exactly like we expected, without even testing the new highs or the previous highs. Okay, gold went to do a double top. Silver didn't even do that. Went straight to the 20 SMA and potentially going even lower here. I think to around 47. Okay, so we're looking very, very good here on these two trades, two shorts I mentioned yesterday. Remember yesterday and the day before, this is where we were with these, and gold as well was looking like it would move up higher, and it's going to push to new all-time highs. No, there was no way this was going to go any higher here, and I don't think it will go higher for a while. I think it's consolidating, profit taking, and money is flowing now into the dollar and other assets. I think we're looking at some defensive plays, but we're also looking at the stock market as well. We also have commodities like US oil, which I mentioned yesterday, that could find a support zone here. And I kind of drew out very lazily, I drew out this kind of path they could take with the rejections and then the build up of maybe around the January period in the new year where we get a move up higher. I don't really trade oil, but I might trade opportunities, stocks in the industry. So that's the reason why I monitor commodities. Natural gas doing pretty well. I think yesterday it did about 14%. Okay, it was about 6% when I did the video with you guys. And then today we're seeing around 1%. This is seasonality. So I already mentioned it in previous videos, I think last month while I was on holiday, and I tried to shoot these daily shows. And I mentioned that seasonality would play a key factor here with the natural gas. We're finding supports around this level, and now we're trying to create a new high. So it's higher low, higher high. So we need another higher high here soon. A bit overextended yesterday with a buy up, but we could move maybe to around 3.7 on natural gas. So again, you can trade some opportunities in stocks here with this one. The other plays that we have, again, metals could have been a good short. You could trade pretty much anything with metals, and it would have been a nice short. This is what I told some of my members on Discord when I was trading gold, that you could trade pretty much any metal and it's going to go down, apart from the nickel and copper and the ones that are used for industrial metals. So yeah, gold, platinum, palladium, silver, all down. Okay. In terms of where I see the broader market, so you're looking at European stocks and UK stocks. The UK, I'm not even watching. So the UK market, as you can see here, I'm not even looking at it anymore because I just don't like it. So we have the FTSE. I think there's no point. It looks decent. It kind of moves with the rest of the market, but most of it is made up of companies that are relying on the US market. There is no independence here. The German market is a bit different. I find it a little bit better, and the French market as well, where there's some kind of variations, and you can kind of hedge into those markets if you don't want to be in the US market. And the Australian market as well, I find it that you can kind of move between markets as well as trade all of them at the same time. Chinese market, or Hang Seng, which is the Hong Kong, it's looking like a short here, so we have to be careful with a potential short position here. And the Japanese is looking long. I mean, looking pretty good and kind of stable here, rising up higher. We also have we had some opportunities that we were looking at in the Korean markets. I'm curious to see where that is. Yeah, done amazing here. Done amazing on this move. So we were looking at this period here, 59.60, a couple of months ago, and it's kind of doubled in value since. So Asia's doing pretty well. Right. I think I'll wrap up with that. I think that's all we need for today. There'll be new ideas, new things I'll have to mention tomorrow. If you guys want to see my analysis throughout the day, you can go and join the Discord group. Is the links below in the description of the video. And you can also go and subscribe to the channel for daily videos, as well as all my social medias, so Instagram, TikTok, and everything else, including Twitter. I'll see you tomorrow. Take care. Bye-bye.